Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. Happy Monday morning. We are finally through that crazy April, end of March, early April, Jupiter, Saturn, Pluto conjunction. Oh my goodness, was that ever a mess? And interestingly enough, I can actually see right across all of the news wires and stuff. I was even putting tweets out this morning. It's fascinating. It's almost like, whoa, everybody's like, okay, well, the worst is behind us. Now let's get back to sort of business. It's quite remarkable how this crap works, man. It's just absolutely stunning. Um, I think it's probably too early to say that the disaster is over. But the irony of it all is I started looking at a lot of price charts and doing our crazy little chaos theories and stuff, and I'm getting a lot of really like bullish upside objectives. I remember talking to you guys on the broiler chicken show just yesterday about these crazy bullish objectives, and look at Ethereum go here. Woohoo! And also, too, I think this is a really good commentary that you really need to follow the leaders in up markets. I mean, clearly, the stock market is having a pretty big day. Where are we here? And I just like to follow these as nice little graphics so you can see. And the breadth is slightly positive today. And gee whiz, that's a big rally. And you know who's going to come out and go, hey, say, I'm taking all credit for this. Capitalism rules. Look at the Dow. Look at stocks zooming higher. And I'm the best. Oh, boy, here it comes. But anyway, Mondays, we have a presentation on the daily brief from our Chief Technology Officer, Sjord, telling us that we're within our heart's beat of actually getting updated data here. So super excited about that. But if you see this populated now, hopefully it means this is a usable tool. But we'll see how that goes. But also, too, on Mondays, once every couple weeks or so, we have Jamie TRI Ogier coming on and talking to us a little bit about fundamental analysis. And here's a really interesting study that he shared with us today. And this is the spread between the 2s and 10s, or basically yield curve, and how the stock market performs. And interesting how we just went through a pivot on that spread, and the stock market got punched in the nose. So really great content that TRI OGers provide on a weekly basis through the daily brief, and I think that's a real sort of value-added service here at TRI. Is we have a number of different perspectives. You never know exactly from one student to the next what kind of information is going to especially appeal to them. Remember, my job is just to set the table and then let you sit down and decide what tools and what information work best for you individually. And Jamie here, he's really, really big on top-down fundamental analysis, which is so cool because it's a very refreshing report that he gives the site about once every couple of weeks on what the heck's going on in the big picture. So we had a lot of fun through today's daily brief, checking them with Sjord and the progress of the site, as well as his perspective on price action. And he's feeling relatively bullish right now, which I think is general consensus. We're all thinking past the eye of the storm, sort of a calm after the storm, if you will, and a little reflation in the market. And then Jamie coming along and sort of, nice sobering overview. Okay, what has been done here damage-wise from a fundamental perspective. For your guys' free video here, I generally like to keep the conversation relatively limited to a few sort of regular assets that we follow. Big picture, the top of the chart here, just what is this US dollar hegemony asset, the US dollar index? Keep in mind all these sort of fiat currencies, they're nothing more than a basket of their local currencies all put together into this US dollar index. And our conversations of late, the absolute eye of the hurricane, if you will, now coming out the other side, Remember, we talked a little bit about gaps up top that probably could be upside objectives if this rally ensued, continued. So I think that seems to me to be a logical target here in the short term. Interesting to see how sort of risk on, risk off coming through that eye of the storm kind of idea. And you can almost sort of see like left shoulder, head, right shoulder. This is one of these funny billiard ball fractals. And remember, that was right around that March 31st, April 1st pivot. So coming out the other side of the storm, interesting Jupiter, Saturn, Pluto conjunct was basically over the weekend. We saw Bitcoin jump up there following that event. And you can see on the S&Ps, we've carved out a nice little inside bar bullish reversal. And should this actually catch, that's going to be a head and shoulders pattern. And I tweeted that out today. Believe it or not, call me crazy. Again, here's one of these nutsos, insano chaos studies. This is basically the same thing that we're seeing on Bitcoin and Ethereum and stuff that I've been doing recently for the Broiler Chicken show yesterday. Well, believe it or not, this chaos theory is actually suggesting that the stock market could go right back up to the old highs. And keep in mind, the U.S. Federal Reserve System, whoever the fuck they are, has just basically come out and said, hey, if you got bad bonds, we'll buy them off your books. Jamie did a great presentation on the difference between corporate quality government debt or corporate debt. Did I say that right? Good quality investment grade, they call it, corporate debt versus junk bonds or, poorly rated corporate debt. And now he believes that the big incentive now for companies is probably going to be things like cut dividends, lay off staff, clean up the balance sheet, just to make damn sure that they stay in that investment grade debt window. Because basically the U.S. Federal Reserve has said, we're going to step in just like we did in the housing market, and we're going to buy up all this bad corporate debt. So if you have that kind of guarantee in the market, and they used to call these like the Greenspan put and the Bernanke put and the Yellen put, now it's going to be like the Powell put, where basically, I don't even know who the hell this Federal Reserve is. There's just a magic balance sheet that sits out in the ether somewhere. But they're just saying, hey, well, if you got bad bonds, no company is too small to fail. So, especially if you own a politician or two, we'll come and we'll bail you out. And it's just business as usual. So don't be shocked. And keep in mind, this was that April conjunct. Remember, we have a pivot that comes up in the end of June. As another one of these pivots, don't be shocked if you see this market up right back up top through that window. And we also talked too a little bit about the fact that Wall Street wants to make their money. They want to make their cut, and usually what they do is they ramp prices of assets up into May, June, sell in May, walk away, blah 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 blah. So what I think they're going to do now is they're going to set up the rally window so that Wall Street can hop off at a small profit or maybe even a large profit, whatever, into that May, June typical selling window. And then we start the whole goddamn game all over again. And keep in mind, the main event, the big event for this year wasn't this April conjunct. It's in November. So be forewarned. This year is going to be a real mess. Anyway, enough rhetoric. Risk on looks like it's catching a bit of a bid. The Russians, the Americans, and the Saudis, lots of saber rattling. How ironic. That one goes out to you, Mr. eBay. I don't know whether I can believe that the Americans, Russians, and Saudis can all agree to do a business deal together. Good luck. But nonetheless, oil caught a bit of a bid last week. You can see it's a bit of a pause right now. Interesting. Let's keep an eye on the stock market. And like I said, I think now, if anything, we've done the 38.2 test. We came back. Remember, I showed you those lower time frame charts. This is a 38.2 on the downside. And you could probably even start hunting bot setups off lower time frame stock charts to trade that higher. So, if risk on is looking a little happier and the Fed put, printing money, blah, 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 risk off, maybe we better be a bit careful here. I can see the bonds with the inside bullish bar reversal in the S&Ps. The bonds have put an inside bar bearish reversal here. We did have a little bit of a bot setup working. That's just doing its thing. Nothing really damaging wise, either long or short. Just where the hell was that one? It's one of these charts. One of these charts is not like the other. Anyway, I don't want to get derailed. But anyway, we've got it around here somewhere. So that's sort of on pause. Now, the interesting thing about gold here is I get the distinct impression that gold is acting very much like Bitcoin acted in 2017. I don't think that there's a lot of sort of fundamental logic to valuing an ounce of gold at $1,700 based on the cost of production for an ounce of gold is around $1,000 or so. But this is, and really you could argue it's the same sort of thing with Bitcoin. Bitcoin price being pumped up here, 7,100 and change. We know that the cost of production is around 3,000 or 4,000 or something at present for sort of the big efficient miners. So is there a bit of premium built into Bitcoin price, just like gold? Yep. I like the idea if you're going to invest in a commodity to try and buy it around cost of production. But it seems to me, like I said, like we saw with Bitcoin 2017, this thing's got a head of steam behind it. And I would be leery about getting too bearish of the gold until we get through this 2020. My hunch is, for whatever it's worth, just like we saw Bitcoin, we're probably going to see a big run up in gold price into that November event, because that's when actually I think you could see talk about the United States of America being bankrupt and all that kind of talk. And then once on the other side of that, we spend the next couple of years working our way back down. So, caveat emptor, do as you please. I had even posted on Friday, I think it was, seeing some very, very, and as, Feds put, print tons and tons of money. Does it make sense that gold would react well through this? I think so. And so on Friday, we had some really interesting action where we had this inverted empire and a Joby gap. Interesting how the Joby gap setup actually projected a test of these highs, and that's exactly where we stopped here this morning. So I don't know whether new ideas in the gold pits are such a good idea at these current levels up top here. You can see where the inverted empire signal is. This is a bit late. Now, having said that, we all remember Bitcoin 2017 at $3,500, and it's going up $100 a day. Is that a good buy? Well, value-wise, not really. But it went all the way up to 20 G's. And so a lot of people go, hey, well, you were wrong. It went to 20 G's. The fact that it came right back down to 3,000, well, that's here nor there. But I see the same scenario here in gold. This to me now looks like a massive inverted head and shoulders. Shoulder, head, shoulder, neckline. And I don't think it's a good idea to step in front of this. This looks extremely uppy. So, it is what it is. Do I have a particular trade setup here working myself? No. I can tell you full disclosure, and again, 1 + 1 = 3. Julian's become a really sharpshooter day swing trader in the gold and the stock market, and just doing a fantastic job. And he turned uber bullish through this, and of course, you can imagine how Julian's feeling today. Way to go, Julian! Individual stocks, of course, I've been watching, very much like the S&P 500, the Canadian stock market carving out that similar inverted head and shoulders. I was really thinking about doing some value investing here for my registered account, but the problem that I have here is that November I'm expecting the market to go to new lows. And then I look at a chart like this and I go, okay, well, there might be a trade here. I could very easily see AB, CD. So I'll move up into 23. We're sitting at 20 right now. That's a 15% move. But what I'm really worried about is what the hell do we do on the other side of this? Remember, I'm looking for that top into sort of, and it probably won't happen that quickly. I'm looking for that top somewhere around the end of June, so it's probably going to sort of work its way kind of like this up into this top. But what the heck do we do over here? And if I go and, registered accounts and stuff, do I really want to be trading in and out of this? Because believe it or not, I mean, you can see this gap right here, and I don't like 2020. So I'm just cooling my jets. I got cash. Cash is king. If this does rally up, I can always take a look at options. We've got our TRI-SOF coming up tomorrow. And I might consider sort of trading these markets, but I don't like this as sort of a long-term investable bottom. This has got trouble written all over it. And, I think I showed in the broiler chicken show yesterday, I showed you Jamie's chart. Here is, this is this top-down fundamental analysis stuff. This is not the kind of environment that you go and bet the farm on your retirement account, right? Ideally, we actually want to see these things emming out. And that's when we can think about going and actually investing our hard-earned money for our retirement. Right now, I'm kind of thinking like stock market's in no man's land. But we'll see how it goes. And never a dull moment. Lots of stuff moving up and down. And there was a couple names that I gave you last week. You can see they're both just working away, doing their thing. I did notice a bunch, and I haven't really looked at a whole bunch of new ideas. I see a lot of gap hires this morning, so I don't see anything that really jumps out at me. But I probably am going to be talking to you guys tomorrow morning about the blockchain stocks. I see a lot of potential W's coming in there. So I might do some nibbling in the stock market. Brian and his W's. If the W's fail, then I got to say, oh, I was wrong and get the fuck out. So it's a fun adventure being a trader, but I'll tell you, like through these kind of W's, sometimes you just got to admit that you're wrong and hop off on the sidelines. So these two little ideas that I gave you Friday seem to be just doing their thing. I think they're both in the biotech field. And I would just go, especially with all the gaps that have been put in. And, even on the S&Ps, there's a cheeky little gap right down at the bottom here. I'd go slowly with your purchases. I don't think there's a huge hurry through this year to go and bet the farm on anything. Heading on over to the corn. It's been kind of fun study. Remember those crazy chaos theory levels. Talked to you guys yesterday about doing this fun one. I have no idea if this is going to work out and rally all the way up here to 11,000, but it is a level that I am watching. It is a trend line resistance off of some recent peaks. It is the end of this massive spiral. And, of course, we got the blockchain halvening, Bitcoin halvening event coming up here. So, I'll be optimistic. As an investor kind of idea, me and good old reload zones, kind of like what I just showed you off the broader stock market. If I really wanted to believe that this is a bottom, I actually want to see reload zone tests. I can't seem to move this damn thing. Always does that. So anyway, for now, right, reload zones are sitting down between about 4,500 and 5,000. I do actually like that idea of this thing coming back down and testing these lows after the halvening event rally. But in the short term, I don't know. It doesn't look to me like the bear is taking over. It looks to me like the bull's still very much in charge. We had huge jumps up on things like Litecoin and Ethereum. We talked to you guys about these interesting candle bodies. Railroad tracks right across all three of them here. I remember we did a video and we're like, uh-oh, looks like trouble on Litecoin. And here's a really good analogy of what railroad tracks often look like and the tests of them, where price comes down into the railroad tracks and somebody had said, get your friggin' ass out of there. And sure enough, they dip down here and they're like, get out of there. And sure enough, the damn thing pops higher. So, if anything, I really like this conversation because, again, 1 plus 1 equals 3. On Friday, we had a great presentation from Colin, who is saying, I'm going to be watching this ETH BTC spread because I see a W coming in there, and that's getting me super excited. So hats off to Colin. Nice call. Brilliant stuff. And interestingly enough, call me crazy, you can see, I think the rally peak is from there to there. So chaos theory. Let's see where the hell this thing wants to go. We've got the magnet on, so it should pick the low and then up to the high. I don't think it's that low, is it? Yeah, well, up there. Let's see, where is that? Yep, that's right. So there to there. So let's see where this crazy chaos level comes in here. Chaos, boom! All right, so it says 0.024872. Within a Netzo 877 RAF Bovo level, all the way up there at 0.0288. Based off of simple trend lines going back over time, probably going to run into a chunk of resistance on this trend line. I don't see why not. And my hunch also, too, is that's probably in and around 38.2s. But, big shout out to Colin. Nice call here, dude. All right, so 38.2s. We could work a little bit higher here. Just beautiful, beautiful work, people. Colin, if you're watching this later on, nice call. Nice call. Way to go, dude. So this is the kind of stuff that we're doing at TRI. And what I really wanted to mention, and I've mentioned this before a couple times, we really want to watch where the money is flowing as sort of the spigots are turned back on and risk takers are coming into the market. Where is the capital flowing? It's interesting how it is flowing into gold. It's interesting how it is flowing back into stocks. Interesting how, we had that crazy movement in the oil market based on Russia and America and Saudi Arabia are going to get together and they gap the market higher. But notice, money's not flowing into oil today. Money is not flowing into Japan. So I'm getting the distinct impression that a lot of capital is flowing into Bitcoin. And then, of course, considering that we have halvening events coming up, there is a fundamental driver to sort of think wind at your back. That really shouldn't surprise us. But this is a great analogy. This is a great message for crypto down the road. There might be more crises. And keep in mind, I think Bitcoin is very much a risk asset. But it is clearly outperforming here. That's great to see if you are a crypto enthusiast. Look at these charts. Big green dildos. Didn't we talk about that? In the short term, where are we likely to rally up to? I'm still thinking, off of the studies that I did with you guys, AB equals CDs. Up into this 8,000 area here in the short term against this downtrend line. Seems perfectly realistic to me. And, of course, had you had the balls to take this bot level, it's there. Whether you take it or not, that's up to you. Move stop to scratch. Never did come back down to scratch. Now we're approaching move stop to trailing. So at the very least, had you did take this level, I'm not going to say it's set up pretty, but nonetheless, levels are levels are levels. You're in a position where you shouldn't lose money. That is absolutely religion now. And it was interesting, we talked about yesterday how we had really important trendline confluence coming up there and how the market ran into that and kept getting smacked back down. And it was just like, okay, are we going to lose this trend line? And then if we M'd out on the other side of this uptrend line, that was bad. Well, I can tell you folks with certainty that did not happen. So this confluence, we resolved bullishly, continuing our way up here. And, in this particular case, I don't see any reason why we can't have some sort of insane blow-off top here. I don't know whether we can reach all the way up to 9,200, but I wouldn't step in front of this thing. Let's just see where the hell it wants to go. And usually these cryptocurrencies, I've found they usually like to rally about a month ahead of their actual halvening event window. And so seeing a rally here at the beginning of April, now that we're finally on the other side of that damn Jupiter-Saturn conjunct stuff, I think that the market actually can enjoy a little bit further up here. I don't see any reason why it can't. The only other thing that I'll say here is I found it fascinating. A trader's life. Please understand that I don't think it's in anybody's best interest to get into the business of predicting. It's a mug's game. Maybe you get 10 predictions right, and then the 11th you get wrong, somebody's going to shit on you. It's just not worth your while. So all I really suggest you do is just try and figure out setups, bullish, bearish, whatever, that work for you individually and just keep trading them. And I thought this shitcoin index, gotta love that name, it's a really good, simple analogy of when I left this on the screen because I just wanted to show you all what a very typical trader's life looks like. We've talked about this bot level here, and we just said that if you're a bot trader, you buy here, your stop is here, and you just live with the results. Now, on this setup, had you taken it, you can now move your stop to scratch. So technically on this setup, you should not lose money. And it's just a trader's life. That's just the way that it goes. Really good example here of you just didn't know what was going to happen, but now sitting in a pretty powerful position. And of course, again, I had it on the screen because I was just so damn impressed. Colin, bringing the value, bringing the solid information our community can use. Hopefully everybody can see just the most beautiful consolidation breakout. And look at how this son of a bitch is just ratcheted higher here. So if you did want to get in on this W, you can see how I've drawn reload zones. And what a coincidence. Reload zones are basically sitting right off of that breakout level. And my hunch is, I don't know where the exact top is here, but we're probably going to come back down, do a very typical, what they call a Wyckoff check. And if you are interested in this pair, I might suggest working some bids. Maybe this means Bitcoin starts outperforming Ethereum here in the short term. Who knows? But really great anecdote. Remember, where is the money flowing on this sort of reflation event? That's incredibly important information. As you as a market participant, and as we said, the money is flowing big time into assets like Ethereum, and interesting enough, Litecoin as well too. Really powerful rally there. So I think I'll leave the broadcast at that for today. Hope you got some value out of some of the levels we talked about. Never a dull moment around TRI, that's for darn certain. Up and down like a horse drawers. People trading setups. I mean, look at this. Just to finish off the video here, this is another one of our OGs, and he actually won the original contest for a seat in the school that we ran years and years and years ago. And this guy's just killing this market. So David announced today, gee whiz, just hit a double today. Way to go. So, I love hanging around the TRI site. The whole concept, opportunity is now here versus opportunity is nowhere. There's always something to look at. There's always a bull somewhere. So, all right, everybody. Hope you got some value out of that today. PMA for the win. Let's see, where's our screen we like to leave off on? All right. So PMA for the win. Slow and steady wins the race. All the best, and bye for now.